How to guarantee a mortgage? Is there even such a thing? Let's find out. Hi, my name's Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process and leading you to mortgage success. Let's get into the vid. So unfortunately there is no such thing as a guaranteed mortgage. However, there are things which are in your control which can give you the very best chance of mortgage success. Now, this video is a condensed version of what you need to do. For full details, you can purchase our mentorship program called First Time Buyer Expert. The link is in the description below. I'll break this down into 5 stages. 1. Continuous employment history. So this one is a biggie. Now, in theory, you only need 1 month's or 3 months worth of employment history for mortgage lenders to consider your mortgage application. But for me, I will not take on a client with just 3 months employment history because I like to prepare people for mortgage success. If you can get 12 months worth of continuous employment history within the same line of work, under the same contract, as a minimum, your chances of a successful mortgage will increase hugely. If you've gone from a contract to employed, then that time resets. If you've gone from self-employed to employed, but in the same industry, that timer resets again. You need 12 months continuous employment history without any changes in contracts or employment status within the same line of work. 2. Having no or low debts. If you keep your debt low, don't buy that £400 a month car just before you want a mortgage. Don't borrow money to purchase items that you don't need just before you want to buy a home. Be as sensible as you can and ideally try to get debts to a minimum. 3. Purchase a traditional property. So if you're buying a house, then a standard brick and tile freehold house. Or if you are purchasing a flat, then a purpose-built flat with at least 80 years left on the lease. This will give you a better chance of success, as most mortgage lenders will lend on standard properties. If you start buying non-standard construction properties like concrete build or converted properties, then the amount of mortgage lenders available will start reducing. It is important to know that when you buy a property, it must be deemed as habitable by the mortgage lender. This means when you move in, you must be able to wash, sleep, go to the toilet and cook food. That means all the plumbing needs to be working, the kitchen needs to be in good condition, and there needs to be a working cooker. Now, you may be buying a run-down property that needs doing up, which should be okay, but can be a bit more on the borderline. Will the lender class it as habitable or not? As long as you can live in the property and keep warm and eat and sleep, then the mortgage lender should class it as habitable. However, some mortgage lenders, like Nationwide, currently have criteria where if the property needs doing up by multiple trades, then that will be against their policy. Now, what that means is that if the property needed some painting, and that was all, then one tradesperson can do that job. Now, if the property needs plastering, new carpets, painting, electrics, then that requires multiple trades. So just be aware that buying properties that need a lot of work may cause an issue with the mortgage lender. Again, in our mentorship program, we help you overcome any eventuality and point out all the best mortgage lenders to use in all circumstances. Just go to www.firsttimebuyerexpert.co.uk for more details. 4. Don't max out what you can borrow. Now, this doesn't mean that if you are borrowing the maximum, you won't get the mortgage. The most successful mortgages I see where my clients are borrowing the maximum they can is when all other areas of the mortgage is solid, such as employment history and low debts. Now, calculating your affordability is a really important part of the process because it's easy to use a mortgage lender's calculator but still forget to input key items such as student loans, pension contributions, property costs of a leasehold property, for example, such as ground rent and service charges. And if you don't yet know the costs of the area you are living in, such as council tax, you may get an agreement in principle and miss out some expenses. You then borrow the maximum you can, and during the mortgage application, the underwriter sees these expenses which are not accounted for and therefore reduces the amount you can borrow. So by not maxing out, you give yourself a little buffer for these other expenses which you may not take into account, which can be the difference between getting a mortgage and not getting a mortgage. Again, in our mentorship program, we provide software that calculates your mortgage affordability with over 70 plus mortgage lenders, where you input all of the expenses such as student loans, pension contributions, council tax. The program helps you work out the council tax of the area you're thinking of buying in, and the software will then tap into the affordability calculators of all the mortgage lenders, deliver you the affordability results within 60 seconds. It's a game changer. 5. Bank statements. Finally, stage 5 is making sure you have healthy looking bank statements. If you're paying £100 a month to your dad, and you have been for the last 6 months, then the mortgage lender may take that as an expense. If you spend £1,000 per month at Deliveroo, the mortgage lender may take that as an expense. Make sure you don't have any funny references on your bank statements, no payments to OnlyFans, and that your net pay on your payslip reflects the money going into your bank. Just make sure there's nothing on there that will alarm the mortgage lender. It should have your income going in and expenses going out. So that's the process broken down into 5 stages. If you've got any questions about that, just let me know in the comment section and I'll come back to you. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for checking out today's video. If you're new to the channel, please do consider subscribing. Have a beautiful day and I'll see you in the next one.